This is the most significant Bitcoin chart to look at, because it is signaling the future. BSV's transaction fee/mining total reward ratio has surpassed that of BTC on July 16 for the first time, and seems to be opening up a runaway gap, standing at 4x over BTC as of August 1. Source: Coin.dance. The chart shows daily ratios, but the ratios computed block-to-block averages would essentially be the same. Currently, BTC BSV prices track almost precisely in proportion to the network hashing powers. In other words, the ratio between BTC price and BSV price is almost exactly the same as the ratio between BTC hash power and BSV hash power, which both stand close to 300:1 presently. Both ratios fluctuate with time, in the range of 200:1 to 300:1 in the recent year, but they are almost synchronized. It means the market is completely writing off the network transaction economics. This reflects a temporary fact that the network transaction fee is a small portion on these networks, but ignores what is already happening and will likely happen at an even faster pace in the future. But watch the trend. Imagine when this ratio for BSV rises above 90%, while that of BTC remains at 1%. It would mean that for the same amount of hash power, a miner would be close to 10 times more profitable on BSV than on BTC. And at 99%, it would be about 100 times, so on. See further below for a more detailed mathematical explanation for this conclusion, but at this point, just trust the math. But in reality that's not going to happen, as miners would have moved over to BSV long ago. Who can ignore a 2x in profitability, let alone 10x? BTC miners therefore face a growing avalanche pressure due to BSV's exponential growth of network fees. If a 10% or 20% extra profit margin is not sufficient to overcome ignorance, ideological bias, personal sentiments, whatever the case it may be, how about 50%, 100%, 200%, 500%, or 1000%? For the same reason, the apps and transactions on BSV are absolutely the key. If they keep going up like they have been during the last month, something big is going to happen in the BSV landscape, including the coin price. It will not be a matter of personal opinions, but objective economics. In the future, due to economic and technical shifts, the coin prices may no longer exactly track hashing power as they have been in the past, and as a result the level of pressure may be somewhat alleviated, so there may be a curved dynamics. For example, nodes on BSV may become so sophisticated that becoming a successful BSV node is no longer a simple matter of having a sheer amount of hash power but requires special business knowledge and specialties. In this case, there would be a barrier for a miner moving to BSV. However, wherever there is a higher profit to be made, the capital and resources will follow. It is simple economics and capitalism. So overall, as long as the BSV adoption continues, it will all gravitate toward BSV. The present and the future. The present price difference between BTC and BSV is a known fact. The purpose of this article is to help readers focus on the trend. It's important to realize that for BTC's daily fees has almost a hard cap, while BSV's is unlimited. The potential room of growth is over 1 million times from here. That BTC's daily fees has almost a hard cap is a well-known fact. It is because the total number of transactions the BTC blockchain can process is already at its maximum block capability. Although the actual number fluctuates from time to time, it has touched the top frequently in the past. And by the very design of BTC, which predicates on small blocks, the top is a hard ceiling, with no possibility to pierce through. With the total number of transactions per block fixed, the only way to increase the transaction fee is to increase the fee per transaction, which is unrealistic because it is already above $10. In contrast, BSV has unlimited block size, and therefore unlimited number of transactions per block. At the same time, the fee per transaction for BSV is less than 1 cent, and has room to go even lower due to competition. For more detail, see BTC and BSV. What is the real difference? It really is an exciting time to be in the BSV space. But potential is one thing, actual adoption is another. Adoption can only come one app and one user at a time. It requires patience, and the patience will be tested, requiring a certain type of personality, and a certain level of vision, to sustain. In addition, even if BSV itself grows as expected, it will not reach success without some very serious fights, including fighting against malicious and illegal attacks. The kind of threat posed by BSV is no small matter for some people who have simply too much at stake due to the strange history of Bitcoin. The dynamics between hash power and price. The dynamics between hash power and price is not a simple cause and effect relationship. Hash power itself is determined by multiple factors, including both the coin price and the level of mining difficulty. The coin price at any given time is entirely determined by the market. But the market's mood is influenced by people's perception of the network strength, which in turn correlates to hash power, and the selling of newly minted coins by miners, and many other things. It is therefore not a simple one-directional linear relationship. But ultimately, a miner's willingness to increase its hash power is driven by profitability. This is hard science according to economics. Let us look at several definitions. Block reward equals block subsidy plus network transaction fees. BSV/BTC hash ratio, BSV hash power /BTC hash power. BSV/BTC price ratio, BSV price /BTC price. BSV's fee percentage, BSV network fee /BSV block reward, percent. BTC's fee percentage, BTC network fee /BTC block reward, percent. BSV BTC fee percentage difference, BSV's fee percentage minus BTC's fee percentage, percent. So the question before the miner is quite simple. BSV BTC fee percentage difference greater than 0 is pure attraction for a miner to move its hash power from BTC to BSV, because it means free surplus profit, provided that the BSV/BTC hash ratio and BSV/BTC price ratio are the same, which has been the case historically. This is because, when BSV/BTC hash ratio and BSV/BTC price ratio are the same, the block subsidy alone results in the same profitability on BSV and BTC. For example, currently, BSV price is 1/300th that of BTC, but if only the mining subsidy is concerned, mining on BSV is equally profitable to that on BTC because mining BSV requires 300 times less energy. So the subsidy part of the economics evens out between BTC and BSV. Note, at the present time, because the fee percentages of BTC, BCH, and BSV are all very small, the mining profitability of these three chains are essentially the same per T/s despite daily fluctuations. See for example, profitability charts on bitinfocharts.com. But all this is about to change when BSV's fee percentage quickly rises above BTC's, and the difference becomes bigger and bigger, and eventually significant. See below. In other words, the Bitcoin subsidy portions of the block rewards always cancel out with each other when compared between BTC and BSV, and as a result, any difference in profitability comes only from the difference in transaction fees. This is very counterintuitive, because one's mind tends to gravitate toward this question: how can that be when BTC price is 300 times that of BSV? But the key point is, the actual prices of BTC and BSV are irrelevant in this analysis, as the dynamics is determined by the relative ratios, and the fundamental profitability is the per unit hash power profitability, rather than the total hash power. Now, if BSV's fee percentage and BTC's fee percentage were also the same, in other words, BSV BTC fee percentage difference is 0, the transaction fee part of the economics would also be the same on BSV as it is on BTC, making the per unit hash power profitability on both blockchains entirely equal to each other. But as the chart shows, BSV's fee percentage and BTC's fee percentage are not the same. And if you understand the designs of BSV and BTC, you will see that the difference is destined to be large. And that is where the real dynamics lies. BSV's fee percentage, transaction fee/mining reward ratio, has surpassed that of BTC on July 16 for the first time, and seems to be opening up a runaway gap, standing at 4x over BTC as of August 1. Why does this matter? Well, it does not at this point yet, but it is going to, and it is going to matter a lot. When the fee percentages of both blockchain are small, miners can ignore them. For example, when BSV's fee percentage is at 4%, it is still almost negligible, despite its being 4 times greater than BTC's 1%, and the difference, 4% minus 1% equals 3%, between the two is also almost negligible. But once the difference between fee percentages of BSV and BTC becomes large, let's say over 10%, or 15%, it would be very hard to ignore. And a difference of 25% or greater may be impossible to ignore. For example, consider a situation where BSV's fee percentage is at 50% while BTC's is at 1%. This would mean that on BSV, the transaction fee is the same as the block subsidy, a 50-50 split, but on BTC it is negligible. Together this would translate to a 2x in per unit hash power profitability on BSV as compared to BTC. More specifically, with the above scenario, total BTC block reward equals 6.25 BTC. Total BSV block reward equals 6.25 BSV plus 6.25 BSV equals 12.5 BSV. That is, mining on BSV blockchain would be twice, 2x, as profitable as mining on BTC blockchain. Now I hear the protest, but you are comparing BSV with BTC. A reward in BSV is not the same as a reward in BTC, as BTC is presently almost 300 times more valuable than BSV. The answer is, for miners, the fundamentally comparable profitability is that of per unit hash power. Provided that BSV/BTC hash ratio and BSV/BTC price ratio are the same, which has been the case historically, the profitability on the BSV chain measured in BSV, the coin, would be equivalent to the profitability on the BTC chain measured in BTC, the coin. Similarly, if BSV's fee percentage becomes 90%, but BTC's fee percentage remains 1%, the total block rewards would be as follows. Total BTC block reward equals 6.25 BTC. Total BSV block reward equals 6.25 BSV plus 56.25 BSV equals 62.5 BSV. That is, mining on BSV blockchain would be 10 times, 10x, as profitable as mining on BTC blockchain. If BSV's fee percentage becomes 99%, mining on BSV would be 100 times, 100x, as profitable. And so on. Above calculations are based on ratios, and the actual prices of BTC and BSV are only relevant to the extent they are part of the ratio calculations. But as said above, in reality the above scenarios are not going to happen, as miners would have moved over to BSV long ago. It is hard to ignore a 2x in profitability, let alone 10x, or higher. For scenarios that are more likely to happen, see the later section hypothetical scenarios of this article. The dynamics of mining. Although the above explanation involves various ratios and percentages, but they really are not that complex. It is simple math. When the above described dynamics kicks in, the only thing that could counter the avalanche effect is a divergence of the hash power ratio and the price ratio between BSV and BTC. If you follow the above analysis, you will see that the only thing that would mitigate the pressure or attraction of miners moving to BSV is that somehow the price ratio between BTC and BSV is greater than the hash power ratio between BTC and BSV. That is, in order to reduce the pressure of miner migration from BTC to BSV, the market would have to deem BTC's hashing to be qualitatively, not just quantitatively, more valuable than BSV's. But how can that be? Even under the current market condition that is completely biased against BSV, the market considers BTC's hashing to be qualitatively the same as that of BSV's, although the market does give BTC a quantitative advantage of almost 300/1 to BSV. Why would it change when BSV is clearly winning the business? I would suspect the hash ratio and the price ratio to be the same for quite long time in the future. And as illustrated above, that would be an extremely favorable condition for BSV, because the extra transaction fees would be pure extra free profit for BSV miners, and that would trigger an avalanche of miner migration to BSV. But eventually I expect a curve to emerge to partially cancel the mitigation pressure/attraction, because an unmitigated avalanche like that is probably unrealistic. Nevertheless, as long as the mass adoption of BSV occurs, the tectonic shift is unavoidable. It'll not be a matter of personal opinions, but objective economics. No one knows the future. But the dynamics of mining has a simple and clear signal here. The only way for BTC to avoid an onslaught/avalanche type of collapse is that BSV perpetually fails to see app/user adoption. It is quite clear that without utility, BSV would be competing against BTC as an inferior store of value, with respect to which the market has spoken. Therefore, the apps and transactions are absolutely the key. Hypothetical scenarios. In reality, as BSV's network fees increase, the hash power on BSV increases, and the price of BSV will also increases to partially balance the fee percentage increase. The following is a series of hypothetical scenarios in which not only BSV's transaction fees increase, but its hash power and price also increase, to result in a more balanced equilibrium. Specifically, in the following series of hypothetical scenarios, BSV's fee percentage increases from the present 4% to 12%, 35%, 65%, and 94%, while the price of BSV increases by 3x, 15x, 50x, 200x, 1000x, respectively. The present state. Transaction fee equals 4, total block subsidy equals 96, unit does not matter, fee percentage equals 4/4 plus 96, equals 4%. Future state 1. Transaction fee goes up 10 times, but block subsidy goes up 3 times, because BSV price goes up 3 times. Transaction fee equals 4x 10 equals 40, block subsidy equals 96x 3 equals 288, fee percentage equals 40/40 plus 288, equals 12%. Future state 2. Transaction fee goes up 100 times, but block subsidy goes up 7.5 times, BSV price goes up 15 times, but the subsidy is reduced by 2x due to the next halving. Transaction fee equals 4x 100 equals 400, block subsidy equals 96x 7.5 equals 720, fee percentage equals 400/400 plus 720, equals 35%. Future state 3. Transaction fee goes up 1000 times, but block subsidy goes up 25 times, BSV price goes up 50 times, but the subsidy has been reduced by 2x due to the next halving. Transaction fee equals 4x 1,000 equals 4,000, block subsidy equals 96x 25 equals 2400, fee percentage equals 4,000/4,000 plus 2,400, equals 65%. Future state 4. Transaction fee goes up 10,000 times, but block subsidy goes up 100 times, BSV price goes up 200 times, but the subsidy has been reduced by 2x due to the next halving. Transaction fee equals 4x 10,000 equals 40,000, block subsidy equals 96x 100 equals 9,600, fee percentage equals 40,000/40,000 plus 9,600 equals 80%. Future state 5. Transaction fee goes up 100,000 times, but block subsidy goes up 250 times, BSV price goes up 1,000 times, but the subsidy is further reduced by 4x due to the two next halvings. Transaction fee equals 4x 100,000 equals 400,000, block subsidy equals 96x 250 equals 24,000, fee percentage equals 400,000/400,000 plus 24,000 equals 94%. In the above scenarios, the transaction fee of BSV increases by 100,000 times, BSV price increases by 1,000 times, and transaction fee percentage is eventually above 90% of the entire block reward. That is, the fee percentage on BSV can continue to increase even with the BSV price increasing by large multiples, and therefore can create an increasing amount of pressure on BTC miners. But as analyzed above, once BSV's fee percentage is about 50%, there is no way that BTC can catch up, and BTC will either collapse or the dynamics will have to change in a way that the hash power economics on the two chains separates from one another and each runs its own ways. BTC restricted in this competition. The higher BSV's fee percentage is comparative to BTC's, the higher the pressure is for BTC miners to move over to BSV. This is the conclusion from the previous analysis, which assumes that the hash ratio and the price ratio are the same or comparable between BTC and BSV, regardless of the actual price difference of the two coins. A 15% difference between BSV's fee percentage and BTC's fee percentage would be hard to ignore. For example, if BSV's fee percentage is 25%, it is very hard for BTC's fee percentage to be below 10%. If BSV's fee percentage is 50%, then it is very hard for BTC's fee percentage to be below 35%, and so on. BTC's fee percentage presently stands at 1%, but historically varied from 1% to 30%, and the fee percentage goes up when BTC price goes down and or the number of transactions increases. BTC is restricted in this competing dynamics because it has no effective tools to counter. Can it increase its own fee percentage to match that of BSV? Mathematically, it can, but in practice that would be committing suicide, because the only ways for BTC to do that are, 1. Reducing the hash power, but accordingly reducing the BTC price, or, 2. Increasing the fee per transaction. It clearly cannot continue to do any of that without collapsing the blockchain. One might still ask at this point, why can't BTC increase its profitability simply by the virtue of perpetually increasing BTC price? Well, the fact that it cannot be done is the point of this article. First off, even if the competitive dynamics brought in by BSV did not exist, it would still be mathematically infeasible to expect the BTC price to go up perpetually. But that is not even what matters here. It is the competitive dynamics brought in by BSV's network fees that matters. A higher BTC price means higher hash power, but the higher hash power would be attracted to BSV to make more money due to the surplus profit from the higher network fees on BSV. This is because, as analyzed above, BTC block reward per unit hash power, unit profitability, cannot surpass that of BSV, which in turn is because the mining subsidy per unit hash power is always evened out by the same on BSV, and the only difference comes from the network fees, which is increasingly higher on BSV. So it is inherently restricted and cannot happen freely on BTC's terms. Everything is going to be framed and driven by the increasing BSV network fees, and BTC will be forced to become a lame duck as far as the competition for miners' processing power is concerned. Another perspective from block size. Because BSV nodes charge fees per byte, the clearest indication of the pressure created by BSV is the average block sizes. The larger the BSV block size is, the higher the pressure is for BTC to keep up. And once BTC price fails to go high enough to keep its hash power, the downward spiral starts, due to the pressure created by BSV. As long as the BSV block size keeps increasing, the pressure increases. And the pressure on BTC miners would create a vicious cycle. First, hash power is being attracted to BSV due to apparently higher profitability per unit hash power, diminishing the actual and perceived quality of the BTC network, thus creating downward pressure on BTC price. But this is a death spiral, because once the BTC price goes down, mining on BTC becomes further less profitable compared to that on BSV, so the vicious cycle continues. The BSV's average block size is currently about 40 megabytes, 40 times that of BTC, and grows exponentially. Yet people are not paying attention to it, must be because BSV's total transaction fee per block in dollar amount is still about 100 times smaller than that of BTC. But people will notice it when miners finally do. If they don't notice it when the BSV's average block size is 40 times that of BTC, perhaps they will do when it reaches 400 times. They should notice it much earlier if they are smart, as the growth trajectory is exponential. Regardless of the attention received, BSV's average block size will continue to go up on a projected track like this: 1 MB, 440, 400, 4000, 40,000, 400,000, 4,000,000,000. A critical point on the way to reach the BSV BTC parity. In particular, note that when BSV's average block size reaches 4,000 times BTC's average block size, a further 100 times increase from the present level, the BSV block transaction fee will reach parity with BTC's transaction fee on absolute terms, or in actual dollar amounts, not relative terms, or in satoshis, even if assuming BSV price remains the same, and BSV/BTC price ratio and BSV/BTC hash ratio remain 1/300. However, as analyzed in this article, BSV/BTC price ratio and BSV/BTC hash ratio cannot still remain 1/300 when BSV's network fees increases a 100x while BTC's remains the same. It would be economically absurd. It is also unlikely that BSV price will remain the same when its average block size has been increased by 100 times, but this has to do with market, not fundamental economics. It would make much more sense if we take the above described future state 2, in which transaction fee goes up 100 times, and BSV price goes up 15 times. Because BTC's network fees cannot go up, now BSV's network fees per block would be 15 times that of BTC in absolute terms, in dollar amounts. Now, even though BTC's network fees may be just a small percentage of its total block reward, the overall BSV's block reward would be at the same scale as that of BTC in dollar amounts. Notice that now we are talking about total block reward in dollar amounts rather than satoshis. By that time, it would be absurd for the total hash power on BTC to remain 300 times that of BSV, or even 100 times for that matter, because it would violate the basic principles of economics when two economies use outlandishly disparate amount of energies, different by hundreds of times, but generate outputs on the same scale. At that point, even if BSV's hash power, and price, is still smaller than BTC's, it would have to be within the same order of magnitude, a difference of a few times at most. And once BSV's average block size reaches the above-mentioned critical point, 4,000 times that of BTC, or roughly at 4 GB per block, there is no stopping for it to go even higher. BSV's Terranode architecture aims at block sizes above 1 TB. In addition, at that point, another dynamic factor would have come into play. BSV would have a tremendous amount of room to further reduce fees while still maintaining superior miner profitability. Lower and lower fees, my friends, are catalytic to explosive further mass adoption. How far is BSV away from reaching the above critical point, i.e., further increasing the present average block size by 100 times? It depends on the adoption. But remember, once adoption starts, it's exponential. For example, if it doubles every month, it takes less than 7 months to reach 100x. If it doubles every 3 months, it will take about 20 months to reach 100x. But if it doubles every half year, it would take a little bit over 3.5 years to reach 100x. For reference, during July 2021, BSV's average block size went from 7.7 megabytes to 46 megabytes, about a 6x growth. Even if the data of the several days of the largest jumps are taken away, the growth speed in the last month was at least 4x, which is essentially doubling every 2 weeks, and at such a speed it would reach 100x in less than 4 months. It is therefore reasonable to project BSV reaching 100x average block size, 4 GB, within the next year or two. If you do not understand the above statements, please reread this article. Summary. Note that I am not doing a chart-based technical analysis. What I did in this article was a far more fundamental economic analysis. Once you understand the intrinsicality in the chart and the above analysis, you will see it is checkmate to BTC. I'm not saying that the particular outcome is unconditionally guaranteed. All I'm saying is that if the BSV average block size keeps going up, the outcome is guaranteed. Killing BTC is not the goal of BSV. It is still possible for both to be successful to serve their different purposes. However, based on the trend analysis above, the kind of expansion that BSV is going to have is intrinsically restrictive to BTC due to natural competitive economic forces. BTC therefore faces growing pressure as BSV grows, even if there is no intentional competition. Even if BSV itself grows as expected, it will not reach success without some very serious fights, including fighting against malicious and illegal attacks. For some parties, there may be simply too much at stake due to the strange history of Bitcoin, and therefore may act not according to the normal incentives of the next block mining but rather some other nefarious motives. In addition, the economic analysis is premised on the rationality of actors, but there are many irrational actors in the world. However, if the dynamics is strong enough, ultimately the economic reality takes place against the backdrop of illegal attacks and irrational acts. Finally, it is a perilous thing to make a theoretical prediction. Most people are probably even not interested in hearing such predictions, but rather hear about things that have already happened. Many cannot tell the difference between a speculation and a theoretical prediction, but blessed are those who do, as that is the difference between astrology and physics. Personally, it may be easy to withhold speculations, but not easy to withhold a theoretical prediction which I have become highly confident of. So here it is, my theory stands to be tested. PS Notes. 1. Answering the question concerning the mining factors such as speculating and cashing out, see comments by Mike Marson. These factors are real. But it'll all change dynamically, and would easily shift in favor of another chain when the price and profitability shift. It may be impossible to predict an exact time point when certain change may occur, but the overall trend is pretty clear. People who have done mining will not only understand this, but can actually feel it when the time comes. 2. What is the evidence to support that big block size correlates to economic success? This is the central point I tried to make in this article. I know where this question comes from, as prior to this, I had always thought the same way. It is nice and well, even looking promising, to have big blocks, but you can't simply assume that big blocks means better node, mining, economics, especially when compared to BTC, which has led to a large successful mining industry. But then I came to this realization: the way BSV nodes are designed to operate, big blocks translate straight to not only higher fees but also pure free surplus profits relative to BTC, and once the difference between BSV's fees and BTC's fees becomes obvious and hard to avoid economically, miners will be pressured to consider switching to BSV. And the above in turn is because the Bitcoin subsidy portions of the block rewards always cancel out with each other when compared between BTC and BSV. The above last point is something that is very counterintuitive, because one's mind tends to gravitate toward this question, How can that be when BTC price is 300 times that of BSV? But the key point is, the actual prices of BTC and BSV are irrelevant in this analysis, as the dynamics is determined by the relative ratios, and profitability is most fundamentally that per unit hash power, rather than the total hash power. I must admit that I myself never thought about this clearly until just a few days ago. I did a lot of explaining why this is the case in the article. I hope at least some people would give it a serious read and think about it. 3. When will this happen to affect the prices? Because of the dynamics discussed in the article, one can objectively say that the temporary price of BSV does not matter, as long as apps, users, and summarily average block sizes keep going up. This is explained in detail in the updated article. The analysis in the article, however, is conditional. It is only effective when the difference between BSV's fee percentage of the total block reward and BTC's fee percentage is appreciable, say at least 15%. Currently, the difference is about 3 to 4%, but rapidly rising. I really would like to see what happens when BSV's fee percentage reaches 50% or higher, because it would create an impossible situation for BTC. Once BSV's fee percentage reaches 50%, the difference between BSV's fee percentage and BTC's fee percentage will be at least 15%, 50%, 35%, and up to 49%, 50% minus 1%, reaching a range of margins that are impossible to ignore by rational miners. This estimate is based on the historical data according to which BTC's fee percentage itself can vary from 1% to 35%. However, it is an extremely generous estimate for BTC, because the higher percentages within the range only happen when BTC price suddenly goes down dramatically and at the same time transactions still reach the maximum both in terms of the volume and the fee per transaction, a rather odd condition, and only transitory even if it happens. In the history of BTC, the average fee percentage during longer periods has always been kept under 10%. In contrast, BSV's fee percentage can potentially go as high as 99%, and continue to stay there. The difference is not only quantitative but also qualitative, because with BTC, due to its restrictive nature, the occurrence of an unusually high fee percentage is almost always a bad signal, while with BSV, even with a fee percentage as high as 99%, there still will be room for positive coin price actions, because its unbounded space sets out a synergistic economy that grows larger and larger, rather than a rent-seeking zero-sum game.